guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
This is TFNN, the Tiger Financial News Network. TFNN of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
The Dow, to the point, because I do the early show at 8:05. I'm going to tell you that the Dow closed at 43,297 after a really strong move on Friday, but the futures right now are down. Let me just go to the futures, YM. Futures are down 140 at 43,508. So the pattern that I'm anticipating is that there's going to be an arch formation, and we'll see if that's going to unfold. The S&P closed on Friday at 60.40, and a very strong move up, a very strong move. Look at that, single leg A to the upside. I'm going to be watching closely to see if it stalls a little bit. So far, it's very good. I'm going to also give you the futures. The futures continuous contract right now down 20 at 6,078. Did make overnight, did make a slightly higher high. This is now a gray leg A because the stochastic's only at 52%. And the MACD is very weak. And let's go to the QQQ that closed on Friday at, QQQ closed on Friday very strongly at 529.96. Today is at 528.05, down almost 2 points. Let's go to the IWM, that's the Russell 2000 small caps. Had a nice session on Friday, right to the 223s, but right now it's at 222.50, down 89 cents. That's the, let me just go to the futures. The futures are down 10 at 22.68. So this is going to be a very important session. Two sessions coming up, going to Friday, and then we get just two sessions for the final 2 days of the year, trading days of the year. And what are we looking at? We're looking at the SMH, the semis, and they're very important. Had a very strong Thursday. Wrong days. A very strong Monday. Tuesday followed through at 251.60, and right now just slightly higher. This is going to be very important. I'll talk about the patterns in a moment. I just want to go through these different sectors. Gold is up 10 at 26.46, and also this is the H pattern that's going into a lowercase m. The dollar has done pretty well, but it hasn't taken out the high of 5 sessions ago. It's at 108.25, the high that was made in the dollar index right there. The dollar index was trading on the 20th at 108.54. Today we're looking at 108.25. Quite good. Let's go on to the bonds. And this really, I think, is the story. Bonds are down again. Bonds are down 22.30 seconds at 113 and 6.30 seconds. Not good at all. Let's go to crude oil. Crude oil is up 48 cents at 70.58. Now, the slow creep to the upside in crude oil is something that I'm going to be monitoring. It's been repelled by the 200-period exponential moving average at 70.87. Right now, it's at 70.59. If it starts to trade, I'm going to give it just a little room in the 71.60s. So just $1 up from here. I think that's going to be a change of trend, because then it can go back and try to test the Chapman Wave inside track repellent zone. And I'm going to go right there. There it is. And that takes you to the whole area of 73 to 74.5. So, and I'm just going to try to remind my engineer, I need a sign to tell me when I'm wrapping up this section. I haven't got maybe I can do it now, but it's not accurate, so there's not much point. Where did it go? I don't even see the clock anymore. All right. Well, I don't have the clock. What can I say? After thousands and thousands of sessions, I should know the timing, but I don't. We've got a long time to go for the break. Okay, now this is going to be very important because these are the patterns that I'm looking at. I missed going long on Friday, any of the indices. That was a really good opportunity to add to our long positions. But at the same time, at this stage, I have to wait a day, at least a day. One of the reasons is I've drawn in this arch formation, which is the pattern that I was anticipating. So for the Dow, that arch is not that all that higher, much higher, 42,433. Another 50, 60 points up, goes much higher than that. That's important. But look, I'm showing you in the daily chart that pink 9-period moving average. It's got a long way to go to cross positive. And I don't think we're in that phase right at this particular moment. I think they're in this rather hesitant phase. Got a new president coming up, whole new administration. What is going to happen? I think that the market is just kind of stalling, taking a breath. And most importantly, the weekly charts did pull back sharp enough for me to say, okay, that now we have to start watching the weekly charts very closely. But there's a different pattern in almost every index. Look, the S&P is a lot better than the Dow. It's going to the Chapman falling axe formation resistance, and that's a resistance of 6,068. We're at 60.40 right now in the cash. The MACD has a long way to go to cross positive. The gray, this is the RSI, Relative Strength Index, is quite good. Not great, but it is good. The on-balance volume is good. The stochastic has turned around. And now I just want to show you this pattern that I've been looking at. I'll just do it on the Dow for the moment. So we were looking at the Dow that made an possible internal low and a residual low. If that's the case, then we have quite a bit to go, at least into about the first week and a half of January. And that's why I'm saying I want to see what happens today. We could have just grabbed a long position right now in any of the indices because they pull back. That's what you really look for. But there's something else going on, and I don't want to fight my own techniques, because if you look at this chart here, and this is a chart that has, let me just show you. This has the Dow, and each one of these vertical lines represents a coincident pattern with the on-balance volume at a high and then at a low. And look at that nice low that was made right there. That was on the 18th or 19th. And look how nicely you've rallied since then. So I have to monitor this, because this says, hey, that could be a low, not the low, but a low that could have a pretty decent rally. So I'm not going to fight it. I'll give it another day and we'll see what happens. I do have a little insurance policy sitting there. We haven't taken it yet. Let's go on to the... and I want to show you this pattern with an S&P. Look, here's the S&P. SPX, there we go. Look, that really is an H pattern. That is a very big pattern. That says, hey, this is good action. Look, even the weekly charts, each one's a little different. In fact, the S&P has an even nicer pattern than the QQQ. And the QQQ with the tech sector has done very nicely. Okay, so we're getting close to it. So that just says if the QQQ breaks above this resistance line, this is the Chapman falling axe formation, all it is a declining, it's a declining cone, expanding cone. And if it starts to trade, I must say a close about 532.50. We're at 528.29 right now. That's going to be very impressive.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
And 10 seconds. All right, I'm going to wrap it up for this particular segment, and then I'm going to go to all my segments. I think I just...
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Here we go. Okay, I wanted to go through a bunch of things. I wanted to go through, look, Amazon made a round number high. Now, Christmas is over, right? The season's over. And it's trading down 48 cents at 228.57. It made an all-time round number high. And this is going to be fascinating to me. I saw a whole bunch of other round numbers over the weekend, over the day or two that we've been off. 223.00, all-time high, round number on the 16th. Let me just type in the 16th here so that I can keep getting that. So that's Amazon. Is it going to go much higher than this? Well, I think it could go a little higher, but I also think that it's just starting to bump into a lot of resistance. Peak D in the daily, leg D in the weekly, and leg D in the monthly. Let's go to Apple. Apple, it just keeps plowing ahead. It's down only 8 cents today, 258.12. And 258.12 says, right there, you've got, I'm just looking for any round numbers. No, nothing. All right, so Apple's still very strong, leg F actually, in the daily chart at 258.20, I think it is, on Tuesday, and right now it's at 258.12. Now we're also looking at the leg D in the weekly, leg D in the monthly. Let's go to Netflix. Netflix, there we go. Netflix is trading up $1.88 to 934.00, round number. Made a high, an all-time high on the 11th at 941.73, and trading right now. Let me just double check. Yeah, I think I did this over the weekend. Yeah, so that's an F. I didn't update it in the last few days. That's a peak F. And now we're looking at trading up again at 934.00. And the leg D in the peak D in the weekly chart, leg D in the monthly chart. Let's go to Google. I'm just going to Goog. Goog is trading at 196.71, down 86 cents. And you've got, this is going to be fascinating because it made a high of 202.88 on the 17th. And it's just been digesting gains since then. That's a D. Peak D. Weekly is a leg D. Monthly is a leg F. Interesting how all of these are getting so close to the monthly time off, and they haven't had it yet. Now, I want to also show you a couple of things. So when you're looking at the cyclicals, you're going to something like the Van Eck Vectors Seal ETF. Look at that massive pullback in the monthly chart. Look at the weekly chart right on the 200-period exponential moving average, and it's like a free fall in the daily chart. And these are cyclicals. These are really important. So this is a very specialized economy at this particular point. The old cyclicals, which in a market like this you would expect. What was that? That was a little ping. Is that telling me something? Can you give me a message? Tell me how many seconds I got you. Just flying blind. I don't like that. So these cyclicals are not showing the kind of strength you would anticipate if the general market, overall market, was strong. And look at this. You go to Toll Brothers. Toll Brothers has taken quite a bit of a hit. Look at that weekly chart. The peak E straight down. Look at the monthly chart. Peak F straight down. And the daily chart made a peak D at 169.52, and it's had 4 little green candles over the last 4 sessions, nothing close to getting to the 200-period moving average of 135.72. Look at the HGX. This is the Philadelphia housing. It looks the same thing. Made a peak D top, a peak F top in the monthly chart. Oh, I'm hearing the music. Oh, okay. Oh, everything's all set. Very nice. Thank you. I appreciate that, Al. And if you can make it just a tad loud, I'd appreciate it. I'll be back in a moment. Basil Chapman, early edition. This is 8:26. We'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
I'm back, and I can hear everything's going well. It's just amazing. You click the wrong button and you're in no man's land. Could be quiet session. Yeah, I just typed that into the den. All right, here we go. So I wanted to just show you a couple of stocks. Goldman Sachs made an all-time high on the 27th of November at 612.73. On the way down, there'd been quite a number of round numbers, but then what it did, it made a low that was on the 18th of December at 544.49. It's trading over almost 40 points higher. It's trading leg B, still a great leg B, because that MACD is still very weak and the stochastic's very weak and the 9-period moving average is very weak. And that's why I'm saying that in this particular phase right now, I think that we are going to see kind of a meandering, a kind of a stalling, just to say, hey, we're not breaking down, but we really don't have the strength. We don't have leadership right now to enough leadership to push very much higher. So this is Goldman Sachs. This is in the IAI, the iShares broker dealer and security ETF. We've been long since 45, way back at the low. This was the low back in 2020, and we've just held that. And then we went into Robinhood, and Robinhood. This is telling me much more of a story. It's down 53 cents today, 39.05. And I said, I believe Robinhood's getting a little bit tired right here. Made a high of 43.83 on the 16th of December. We've taken some money off because we want to keep the core. But I think we get it. And I put this together. I said, I think that Bitcoin and Robinhood, once the gold stock stopped, which helped Robinhood, and then money flowed into the Bitcoin, that took over. That was that balance of power where you've got one area it's just holding okay, and the other one leads, and then the leader starts to take a breather, and the other one takes over. And that's really what I've seen gold stocks to the Bitcoin. Bitcoin looks to me like it's a little toppy here, and I think that corresponds to what I'm seeing in the Bitcoin. I don't know if it'll go much higher than 43, 44, but it's really important. 32 is going to be key support over the next week or two. If it takes that out, it says, hey, could be having a longer, more intermediate term setback. All right, let's just go through this again. Look, the dollar is trading up 9 ticks at 108.22. Look at the euro, EUR/USD. That's really been coming down and retesting the left side low. Let me just refresh that. There it is. The left side low of November, and it's held, and it's got a second. It's got two arch formations. This is a smaller one right here, and that just says watch over the next 2 weeks, because if it takes out the low that was made on the 20th of 1.034, that would mean that it could very well test the low of the 22nd, which was 1.033. So I'm watching this very closely, and the way it looks, with the MACD holding quite nicely, relative strength, not bad, and the stochastic starting to form a base, it's saying to me, hey, just be careful. There's a chance that the dollar is going to get a little bit tired and take a breather, and that means euro could rally, maybe even gold. I'm watching this very closely. And look at the, here we go. This is the Japanese yen. There's a US dollar, Japanese yen. So you've got the currency pair, A, big B, big C, big D, and a leg E, and maybe a peak, and a peak E on Tuesday. And it says, and a leg B in the weekly chart, that was, and that means you've gone for the left side, right side price time match. That's out. We have to look at it even longer term, and that just says watch this closely, because if the yen at 157.73, up 50 cents right now, actually starts to break under 154 over the next 2 or 3 weeks, that says, okay, timeout. But if it actually goes above 159.30 in the next few days, that's going to be another big positive. So as it stands right now, a little bit cautious. Haven't added to our long positions. Added a new position, which I think could be very well under pressure. It's a deep cyclical stock, but it looked to me like it was just showing a little bit the kind of strength I like to look at to say now is the first opportunity. It's the first time we've been in the stock since, I think, 2022. Now's the opportunity for at least for it to have somewhat of a rally, and we'll be watching it very closely. And that would be that whole rotational thing. Okay, let me show you silver. Silver right now is trading up 0.07 at 30.36. Not going anywhere, stuck to the 200-period exponential moving average. So now let's just look at a scenario. If in January the dollar starts to pull back with the general market, and it doesn't have to be anything other than just a normal digestive phase, then if we were looking at silver, it needs very much on a weekly basis. You see this pink 9-period moving average? To get that pink in the weekly chart to go green, the 9 over the 14, which is a positive, you'd have to go into the wick, deep into the wick of that candle, the candle of the 13th of December, that had a very big move. It had a high of 33.32 and a low of 30.75. You'd have to go on a closing basis, at least for a day, you'd have to close above 32.63. And you're at 30.37 right now. If that happens, then all of a sudden you're going to make another U-shaped pattern, and you will target the top of that, which is at 33.33. Right, in the meantime, it's just stuck in a sideways pattern. I'm just giving you scenarios, and those scenarios are, if I had to give them a weight, in other words, how much do you believe in it? I would just say this, that these two sessions, today and tomorrow, leading into the final swoop of the 30th and 34th, what are we talking about here? Talking about the Monday the 30th and Tuesday the 31st. How we come out of it into the first 3 trading sessions of January are going to be very important. That's why I'm saying I think that we've got a potential. We had a 382 recovery in the Dow on a closing basis going into Tuesday's close. If by the end of the day, instead of seeing weakness at about 11:30, about minus 80 or more, by 12:30 this afternoon, we're actually up 40 points or more. Oh, that'll be really good. In fact, if that's the case, we will have probably an upgrade to buy signal in the Dow, probably the SPX, if the S&P can come back from being down in the futures, down 20, to even just down 5 at 12:30 to 1:30 this afternoon, and then push even higher than Friday's high. That'll be very positive. This is a single leg A. You can't count that because that was the low. Can it also be the high, except at a Chapman Wave instant restart at peak D. So you have to wait for a trough to form. But it did form on Monday, and Tuesday had that big move. So that's a gray leg A. Let me change the color. This is gray leg. I can hear the music, Al. Thank you. I'm back. I'll be back in a moment. Basil Chapman, early edition, 8:38 this morning, and 10:38 if the Dow is minus only 40. That'll be a good sign. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back. So the E-mini is now down 24. The S&P 10-minute chart says that the 200-period moving average of 6,067 is going to be a very important support to hold. I'd say 6,067 to 6,063. That area must hold. So let me just sum it up because I think this is very important. I'm looking at the move on Tuesday as a little bit of an aberration, quiet day, and big move to the upside. Not to be dismissed, but look what happened. You went from, in the S&P, you went from 5,000, I should type that in, 5832.30. Let me put that in, 5832. So 5832. Did I say 50? Okay, and now what you're looking at 60.40 on Tuesday, and at the moment we're at 60. We're in the futures. We've pulled back about 24 points. And that just says to me, this is a work in progress because that weekly chart is still fabulous. There's nothing wrong with it. The MACD has crossed negative, stochastic still at 89%. That's fabulous. On balance volumes pull back. And even more importantly, the 9 is way over the 14 in the prices. So I'm looking at this and I'm just saying, as we go into year end, maybe into the early part of January. Now, I've thought about this a lot. Up in 2016, from that moment on, Trump spoke about his kind of almost like a benchmark that the stock market would be going higher. And he said that now, and he's spoken about the golden age. My concern is that golden ages just occur. You don't say, I'm going to a golden age. So we've got to be very careful. There's a lot going on. He's not necessarily. You've seen what happens with the senators and the Congress people. You've got mixed feelings about voting in unison, and so I'm inclined to think right now that the market is representing the general, a kind of a consensus that we don't know what's coming next. And I think that that's going to be reflected in the general market. And that's just saying to me, now's the time to be a little careful. That's the reason why we, over the last couple of weeks, been taking some money off. Yes, we keep getting new trades, but basically they are thought of more in the terms of show me what you can do, and they've done very nicely. But in the meantime, I am a little cautious, and we have gone, as I say, into a cyclical stock. We've got our short position sitting there ready to use it. I haven't used it yet. We did the other day, but haven't got back in. I just want to see what can happen next. And to me, I'm looking at a mixed market. Look, here's Microsoft. 556 was the most recent high. All-time high is 568.35 back in July of 2024. It's had a huge move down to 385, and then a very big struggle with higher highs and higher lows in the weekly chart to a peak C, and it's just kind of stalling right now. And that just says to me, you've got to consider that if Microsoft, which is holding well, is not able to make a new all-time high, as almost all the other, look, Apple, we just went through Apple, Amazon, they've all done all-time highs. This has only done a recovery high at a peak D. It's just telling me that this is a market that's becoming more and more selective. All right. With that said, I wanted to go through some things like the XLF. This is the financial stock. What a big move from the 51.50s down to the 47.50s, and now trading at 48.99. Yes, this is a gray leg B, but the technicals are really not confirming it at all. And that just says to me, I'm going to come back to bonds in a moment, peak A, leg B, not great. And the weekly chart has got a potential peak F right here. 9 is over the 14, very nicely. The MACD's just turned negative. Stochastics just under 80%. On-balance volume is pulling back. So it's that 914 that's holding this particular sector up in the weekly chart. Monthly chart has made a leg D. Almost certainly it's a peak D. I cannot see anything getting the XLF, the S&P Select Financial Spider Fund, to the high of the 27th, which is at 51.62. We're at 48.80 right now. I suppose it could happen, but I think it's really unlikely. But more importantly, the KRE, which we're now out of, we're out of it. This is the S&P Regional Banking ETF. It did very nicely. It went to 70.25, a recovery high. All-time high is 78.81. I need the regionals. I want the regionals in 2025 to have a really strong rally to go back to 78.81. They haven't done it yet. And this just says to me, it's still a very selective market. Here's something else I wanted to look at. Look, when you've got stocks like TMO, this is Thermo Fisher Scientific Inc., medical equipment, made an all-time high in 2021, December. 3 years ago, 672.34, slumped down to the 415.60 area in October 2023. Had some really nice rallies, but it cannot hold it. And the last one was at a peak D in the weekly chart in the 620s, and it's come down to the 200-period moving average, Thermo Fisher Scientific. And so that just says the whole, let me just see what MDT is doing. Look at this. This is Medtronic PLC. This is now an Irish company. It was American. It was taken over by an Irish company. 153.89 was the September 2021 all-time high. Plummets down to the 70 level, and now it's trading at 81.54. So it's such a selective market. So also we've got things like QUBT. Look at this QUBT down 36 cents pre-market at 1673. Made a peak D at the 27.15 level. This is quantum computing. Spectacular move, taking a little bit of a breather right now. And leg E in the weekly chart. Only a leg A in the monthly chart, going from pennies back in July. It was at 35 cents. 35 cents to $27. I mean, that is unbelievable. So sector by sector, when you go through these things, you see which is the in area, which is the out area. Obviously, this is the in area. There was another one that was brought to my attention. Before I do that, look at IoT. This is very important. This is Samsara Inc. This is engine tracking. This is locomotives. Makes a leg D, probably a peak D. I think this is an all-time high. I'm pretty sure it's an all-time high. Yep, all-time high back in November at 57.51. Trading right now at 45. Peak D. Remember, peak D is where other things can happen in the Chapman Wave methodology. Peak D in the weekly chart, peak D in the monthly chart, the peak C1, C2 double top right here at the 57.51 level on the 25th. So this is telling me that, not everything's great. Look, jets. Anybody try to get a plane ticket over the last couple of months? Ooh, prices, huh? Look at this, jets. Big move up, and that's down 20 cents right now, pre-market, 25.61. But really strong move. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour on Thursday, the 26th. This is 8:50 a.m. Eastern Time.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Hi, folks. As we're wrapping it up, the market keeps trying to come back. Hasn't been able to. The Dow futures are down 157. The S&P futures are down 20. And the NASDAQ futures are down 71 at 21,957. Look, yes, GDX just not doing very much. I wanted to show you the JETS, which is the U.S. Airlines, had a fabulous move. This is really strong. So I don't have any signals yet in this particular sector. If you look at the IYT, that's different. That takes in the rails. It takes in all the other areas of the transportation ETF as well. Did make a beautiful move to coincide with the Dow making its high. That was just in November, not December, and it's pulled back sharply to the 200-period moving average. So we had that coincidence, like a Dow confirmation, Dow Transports, Dow Industrials. They're not really industrials anymore. Anyway, now we're watching some digestive phase. And I think this digestive phase could go on for a little while. So I'm kind of cautious here. Yes, we've added some new positions, but at the same time, a new position, I should say. For instance, I wanted to add to the AIQ. We've had a fantastic success with this. But you know what? It's in this Global X Artificial Intelligence ETF. I want to see what happens over the next couple of days. It's in a kind of a toppy-ish area. That's just not a major sell or anything like that. We've only taken little bits off, but I'd like to add back to it. I should have added back when it pulled back to the 38s. I didn't. And now it's at 39. Not a big deal because the high was 40.65. But I'm watching this close. So there are areas that are telling me, giving me clues as to the residual strength of areas that have been fantastic up until now. Can they stay that way? Leg D in the monthly chart, peak D in the weekly chart, peak D in the daily